With over 1.4 million paying customers, DocuSign is the largest e-signature company in the world. It's estimated to hold a nearly 68% share of the e-signing business. So with shares selling below the 52-week high, it's now a buying opportunity or a signal to stay away from the stock. Before we look at the charts, let's look at this article. So DocuSign shares shot up towards the end of 2023 and into 2024 because of news reports that the company was in talks to be acquired. However, no such deal appears to be happening at this time. As a result, DocuSign stock dropped. DocuSign's ability to successfully grow its business is what can drive its share price higher over the long run. The company's sales hit $700 million in its fiscal third quarter, representing 9% year-over-year growth. DocuSign's revenue has been on an uptrend ever since its IPO in 2018. The company's sales gains are expected to continue. DocuSign forecasted fiscal Q4 revenue of at least $696 million. That would be good for an increase over the prior year of roughly $36 million. Along with revenue growth, DocuSign exited Q3 with net income of $39 million. That is a dramatic turnaround from the previous year where it lost $30 million. Now let's talk about some of the milestones. It recently hired a former executive at Alphabet/Google back in 2022, and his name is Alan Dijensing. And his vision for the company, which he thinks is very promising and achievable, is opportunities beyond the placement of paper signatures to deliver innovative new experiences and integrate more deeply with partner applications. And speaking of partners, they announced a partnership with Facebook's parent Meta last November, in addition to Microsoft, by expanding its e-signature integrations to more products. Again, with regards to Microsoft, with its Microsoft Power Pages. Now, Alan has kind of stabilized the fiscal debacle. They generated fiscal or free cash flow in the third quarter of $240 million. That was an increase from the prior year of $36 million. Also, the balance sheet looks solid. Its Q3 total assets were $3.3 billion compared to $2.1 billion in total liabilities. It also has cash and equivalents along with $1.2 billion. All right, so let's get into the charts. And we're going to go straight to the monthly chart. And as the article mentioned, price increased or surged, right, on buyer-opposite rumors, which didn't pan out. And as you can see, when the rumor came out and was dead, price hit this resistance level at $64 and has been on the down decline ever since. Staying on the monthly chart, if price can pull back another $15, well, that was a level that has served in the past as a buying opportunity. Once in October of 2022, and then again in October of 2023. Looking at the weekly chart, you can see that since June of 2022, price has just been in a range-bound price action market in which you could have bought at 40 and short it at 60. Now, where's price relative to the 200-day moving average? It's sitting right at the 200-day moving average. Now, one could say this is an M pattern. And typically when you have M patterns, you see price typically retrace to the trough before price continues to move down. Now I have no idea what's going to happen in the middle, but I can tell you that at the extremes, sub 40, where you have an imbalance between buyers and sellers, you go long. And near that $65 level, you have an imbalance between sellers and buyers, and you short it. What do you think? Where's price heading next? Leave me a comment. Thanks for watching. Subscribe, please. Like the video.